Ticker symbol TSLY is a new covered call ETF that has been all the talk and all around the internet as of recently. And honestly, maybe for good reason. According to the YieldMax website, the TSLY ETF is currently offering a distribution rate of over 70%. But although this relatively newer ETF seems to offer a massive dividend and seems to have a solid strategy, there are still many unanswered questions and concerns that has a ton of everyday investors looking for answers. Now in this video, we're going to do a deep dive into the TSLY ETF and show you exactly how this sort of complicated ETF actually works. But also stick around until the end of the video because I'm going to go over the exact math and explain how a small amount of money invested into this ETF could be life-changing for income-focused investors. Now stay tuned because we have a lot to go through. Right after you, please drop a like in this video and subscribe for more future content like this. So first things first, heading over to the YieldMax website where TSLY has all the information we're going to need. Wasting no time and opening up the YieldMax TSLY Tesla Option Income Strategy ETF prospectus. It says investment objective. The fund's primary investment objective is to seek current income. The fund's secondary investment objective is to seek exposure to share price of the common stock of Tesla, or TSLA, subject to a limit on potential investment gains. Now, as far as fees go with this ETF, it is going to be a pretty massive fee of 0.99%, but as you keep watching this video, you're going to understand exactly why. It then says principal investment strategies. The fund is an actively managed exchange traded fund that seeks current income while maintaining the opportunity for exposure to share price, i.e. the price return, of the common stock of Tesla, or TSLA. Subject to a limit on potential investment gains, the fund will seek to employ its investment strategy as it relates to Tesla regardless of whether there are periods of adverse market, economic, or other conditions, and will not seek to take temporary defensive positions during such periods. So that's very important. No matter what happens in the market, TSLY is going to stick with the strategy and keep it moving regardless. Now, this is a very important part of this ETF, so listen closely. It says the fund uses a synthetic cover call strategy to provide income and exposure to the share price returns of Tesla, subject to a limit on potential investment gains as a result of the nature of option strategy it employs. The fund's options contract provide, number one, exposure to the share price returns of Tesla, plus current income from the option premiums and a limit on the fund's participation in gains, if any, of the share price return of Tesla. So next, this is also important. Why invest in the fund? The fund seeks to participate in a portion of the gains experienced by Tesla, which a lot of everyday investors, including myself, are definitely interested in too. The fund seeks to generate monthly income, which is not dependent on the price appreciation of Tesla. So because of the synthetic cover call strategy, Tesla doesn't necessarily need to move up in price for the fund to generate a lot of money for investors, which is also very appealing. It then says although the fund may not participate in gains at Tesla's stock price, the fund's portfolio is designed to generate income from it. It then says an investment in the fund is not an investment in Tesla. This is maybe the most important part that a lot of people are getting very confused about. The fund strategy will cap its potential gains if Tesla's share increases in value. And that's because of the cover call strategy. Now, the fund strategy is subject to potential losses if Tesla's shares decrease in value, which may not be offset by the income received by the fund. So this is no different than any other cover call strategy for the most part. If the underlying loses a massive amount of value, even though the cover call seller has a bit of downside protection and earned the premium, it doesn't necessarily mean that the whole strategy isn't going to lose value. Also very important, it says the fund does not invest directly into Tesla. Fund shareholders are not entitled to any Tesla dividends. It says as part of the fund synthetic cover call strategy, the fund will purchase and sell a combination of standardized, exchange-traded, and flexible exchange call and put option contracts that are based on the value of the price returns of Tesla. In general, an option contract gives the purchaser of the option contract the right to purchase for a call option or sell for a put option the underlying assets like shares of Tesla at a specific price known as the strike price. Now, the synthetic cover call strategy is what this ETF uses. So it says in seeking to achieve its investment objective, the fund will implement a synthetic cover call strategy using the standardized exchange-traded and flex option strategy above. So a traditional cover call strategy is an investment strategy where an investor, the fund, sells a call option on the underlying security it owns, and that's something that I do throughout my portfolios on a regular basis. A synthetic cover call strategy, something I don't do, is similar to a traditional cover call strategy that an investor sells a call option that is based on the value of the underlying security. However, in a synthetic cover call strategy, the investor, the fund, does not own the underlying security, but instead synthetically replicates 100% of the price movements of the underlying security through the use of various investment instruments. So the fund synthetic cover call strategy consists of the following three elements, each of which is described in greater detail further below. So a synthetic long exposure to Tesla, which allows the fund to seek to participate in changes up or down in the price of Tesla stock. Then on top of that, a covered call writing, where Tesla call options are sold against the synthetic long option of the strategy, which allows the fund to generate income. And then on top of that, some of the fund is going to be US Treasuries, which are used for collateral for the options, which also generate income. So simply put, with the TSLY Yield Max option strategy, if Tesla within the time frame of the expiration date of the synthetic cover call trades in the right pockets, the TSLY ETF could see some capital appreciation as well as be able to distribute a massive dividend, which is what they've done so far. But to look at TSLY's ETF price return so far, the fund is down 35.21%, and this is just since November of last year. Now, this is maybe one of the scariest things about funds that are sort of built around these same parameters, because a lot of times they have a promise of offering a massive distribution on maybe a monthly or quarterly basis, but unfortunately, quite often, the ETF price decay looks very similar to this. But not so fast, it's definitely not all bad. Looking at the dividends that have been paid so far from TSLY, the price decay is definitely going to be made up for, plus some. Back earlier this year, this ETF paid a $1 dividend. The month after that, 90 cents. 90 cents after that, 83 cents after that. Then there was a small payout back in May of 44 cents. Then 80 cents, $1.07. And then as of recently, 83 cents. But maybe most importantly of all is to look at the total return for TSLY, which is the share price return plus dividends included. So year to date, this ETF is still up 61.58%, which is absolutely crushing any other ETF that I've seen so far this year. And although this ETF hasn't been around all that long on multiple different time frames, it still looks really interesting. And unfortunately, this ETF has not been around all that long, so we don't have all that much historical data to go off of, but this ETF has been very interesting to watch so far this year. Now lastly, I promised that just $10,000 invested into TSLY could in theory generate a massive amount of dividends for an income-focused investor every single month. Now the way that we do the math is $10,000 divided by $14.20, which is right around the cost of a share of TSLY as of right now. Now that means that an investor in theory could buy around 704 shares of TSLY. Now TSLY does pay a dividend on a monthly basis, and as we went over the whole strategy, it's pretty complicated earlier in this video, it's no secret that the amount that's paid on a monthly basis is going to be most likely volatile because once again, the underlying strategy. But that being said, the last dividend that was paid was 83 cents per share earlier this month. So that means in theory, an investor that bought $10,000 or 704 shares of ticker symbol TSLY could in theory earn around $584 on a monthly basis, which is absolutely insane. So there we have it. There's a complete deep dive into the TSLY Yield Max ETF and a lot of what it has to offer. Now for those that are interested, I currently am buying a few shares here and there of the Yield Max ETFs. I think at this point I maybe have 20 or 30 shares of TSLY and some of the APLY also. Now this is simply because I'm a huge fan of the underlying strategy of writing covered calls. Like I said earlier, I currently do that throughout my dividend portfolios. And I'm also just very curious to see how the ETFs perform moving forward. But honestly, for my risk profile personally, these ETFs will never likely make up more than 1 or 2% of my overall holdings. But I want to hear from you guys down below. Have you personally bought into the Yield Max ETFs as of this point? And if so, which tickers have you bought into? If you enjoyed this video, make sure to please drop a like down below and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.